In this current market of quantitative easing, 0% interest rates, and cheap money, there's only one place to run. And that place to run is gold. The unfortunate reality is that the way things are currently headed, we are likely to see a major restructuring in the markets very soon. We have fixed none of the problems that were created during the financial crisis of 2008, so when the next bubble pops, things will be much worse. Only this time, the banks won't get bailed out. Instead, we will most likely see everything collapse. So is gold a good investment in this current market? You better believe it. Central banks are printing more money than they ever have before, and investors are frantically looking to the stock market for so-called signs of economic growth. Unfortunately, nothing could be further from the truth, because the stock market, in its current form, is not relative to economic growth at all, only inflation and asset bubbles. Peter Schiff, CEO of Euro-Pacific Capital, was quoted as saying the following in a recent interview with the New York Times, and I quote, "But we got this phony bubble economy that gets bigger and bigger. People focus on the stock market. They say, well, the stock market is going up, that must mean the economy is getting better. No, it doesn't. There is just a lot of cash, a lot of inflation created by the central banks. So they are able to inflate a bubble in stocks or in real estate, but they are not able to generate legitimate economic growth." End quote. Of course, once the financial experts and a majority of investors figure this out, it will be too late. Gold prices will be much higher by then, and we have already seen gold prices creep back up again in 2014. Peter Schiff and Jim Rickards were recently interviewed about where they feel the global financial system is headed, and both of them said they are investing heavily in gold. They are both predicting a global financial collapse, and Peter Schiff thinks the price of gold will go to the moon. Peter has accurately predicted both the stock market bubble of 2000 and the real estate bubble of 2008. So without further ado, here are 25 reasons to buy gold. Reason 1. Gold is real money, has tangible value, and unlike fiat money, it can't be used as an instrument of debt. Reason 2. When a gold transaction is done, it is truly complete. Both parties hold something. When a transaction is done in fiat money, the transaction is not settled, because that note is owed by a central bank or government. Reason 3. Gold certificates can be used to purchase real gold, if necessary. Fiat money is not redeemable for anything. Although it may be used as a medium of exchange, it has no assets backing it whatsoever. Reason 4. Gold has been universally accepted as money for thousands of years, and this still holds true today. Fiat money, on the other hand, is accepted according to agreements that can be broken or made void at any time. Reason 5. In times of crisis, gold has always been accepted as money. A fiat currency backed by nothing will most likely not be accepted in a time of crisis, such as an economic collapse. Reason 6. Gold has intrinsic value. The labor and resources used to produce a gold bullion coin or bar are still present and preserved as a finished product. Fiat money has no intrinsic value except for maybe being able to start a fire. Reason 7. Gold is rare and difficult to produce, and because of this it is very valuable. Fiat money can be printed in unlimited quantities. Reason 8. When gold was used historically as money in a society, the increase in the money supply was always dependent upon population growth, because miners were needed to mine gold. With fiat money, an unlimited amount can be produced, and therefore the money supply typically grows much faster than the population. Reason 9. Gold has been used as a storehouse of value for thousands of years, and continues to be used today to protect people's savings against the threat of inflation. Fiat money cannot be used as a storehouse of value, because people do not perceive fiat money by itself as valuable. Reason 10. Gold is a stable currency, and historically we have seen this to be true. For the short amount of time we've had fiat money, it has always ended badly. In fact, the average lifespan of a fiat currency is just 27 years. Reason 11. A great deal of all the gold mined in existence still exists today, and that includes gold mined thousands of years ago. Paper, on the other hand, might last a few decades or more before falling apart or ripping in half. Reason 12. Gold has been used to protect against inflation throughout history. In terms of value, it is about the same as it was 2,000 years ago. The only thing making the price go up today is endless money printing by central banks. Reason 13. An economy under a gold standard typically enjoys stability and growth. Of course, there will always be economic disruptions, but a gold-based monetary system tends to be much more stable in the long run. Fiat money always creates booms and busts, leading to credit expansion and contraction. Reason 14. The value of gold is much greater than fiat money, and that is why central banks and investors of all sizes buy gold. The purchasing power of fiat money always erodes over time due to endless money printing. Reason 15. Gold has been used as money for over 5,000 years. It's only been recently, since 1971, that we've adopted a fiat-based monetary system on a worldwide scale. Reason 16. Gold will never fail because it is a physical commodity. However, every single fiat money system in history has failed. Reason 17. Gold was a standard monetary system for thousands of years, typically without any government or central bank regulation. Fiat money always serves the bankers and governments best because it makes it easier for them to lend, as well as go into debt. Reason 18. Gold offers protection against outside threats, such as a collapse in the monetary system. If a fiat currency collapses, it will become worthless, but if you own gold, you will likely prosper during a collapse. No government can guarantee that your savings in a particular fiat currency will be safeguarded in a collapse scenario. Reason 19. Gold is a great way to protect your savings, because it protects against the external threat of inflation. For this reason, gold can be a great way to pass on your wealth from generation to generation. The purchasing power of fiat money, on the other hand, is almost always eroded from generation to meet the demands of governments and banks. Reason 20. Gold typically allows individuals to hold their wealth outside of the control of governments and central banks. With a fiat-based monetary system, central banks often decide the fate of the currency, as they are typically the ones that control the money supply. Reason 21. Gold distributes wealth and prosperity to the people, while fiat money typically concentrates power to the banks and government. The end result almost always ends in abuse and corruption. Reason 22. When a nation is under a gold standard, the government can only expand proportionally to the size of the economy. The optimal size of government is about 20% of GDP. Fiat money was created so that governments could expand rapidly and become empires, often with the sole purpose of launching wars. In the United States, the current size of the government stands at about 45% of GDP. Reason 23. Gold prevents the banking industry from expanding disproportionately to the relative economy. Fiat money allows the banks to expand at a level where it can dominate the government and the society, which always ends in corruption. Reason 24. A gold-based monetary system makes it very difficult for a nation to launch endless wars. Fiat money allows a government's military to become absolutely massive, as all the government has to do is get creditors to accept their debt-based notes to fund their wars. Reason 25. Gold is real money, and is naturally supported by the free market. Fiat money entails central planning of the economy, think monetary policy, which is always bad for the free market. Well, there you have it. Gold prices are set to balloon upward, and as central banks around the world continue to inflate their currencies, we could easily see the price of gold hit $5,000 or more per ounce, although I suspect gold prices could go much higher than that. I'd like to finish off by reminding everyone of what happened to the price of gold in Weimar Germany during the hyperinflation they experienced in the early 1920s. The price of gold went from 1 paper mark in 1918 all the way to 1 billion paper marks at the height of the hyperinflation in November 1923. This is just one illustration of what can happen when a nation is loose with its money supply, and we are witnessing the exact same apocalyptic monetary policy in America today, thanks to the Fed. Let's hope it doesn't get as bad as it did in Weimar Germany, but if it does, I hope you own gold. What do you think? Are gold prices set to balloon upward? Do you own gold? Leave your comments below.